Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing some technical analysis on Bitcoin. We're going to be diving into some news having to do with Coinbase Pro's fees, PayPal dropping out of Libra, but we also have to touch on some philosophy. Now, that's not something you hear very often on a cryptocurrency technical analysis channel, but I promise you guys that we're going to be applying a philosophical principle called Occam's razor that if you've ever heard about, you probably already know where I'm going with this, to our technical analysis, and I'm going to be using it to explain why I'm not bullish on Bitcoin right now, and why I'm in fact looking for Bitcoin to go even lower. We're going to be diving into all of that in today's video. I think you guys are going to get a lot of value out of it. If you do, go ahead and drop us a like down below, and make sure you hit that subscribe button if you watched a couple of our videos and you want to see more of them. And also, guys, I do want to remind you at the outset that the channel here is sponsored by the Cryptocurrency Technical Analysis Academy. There's currently a $40 off coupon code down below. That would be October 2019. You put that in at checkout, no spaces, you'll get $40 off the course price. So for only $159, you will get access to over 10 hours of high quality content that no matter what skill level you are, you're going to get a lot of value out of. More on that at the end of the video. But guys, let's go ahead and dive right on into the content. Now, you probably saw in the title of today's video that I'm not feeling very bullish on Bitcoin. And in fact, I really don't think that I can feel bullish on Bitcoin until we start seeing certain things happen. And in fact, we talked about that in yesterday's video. That's why I started on the BLX chart, because that's where my analysis for that video is. You guys can see I have this flat level at around $8,505 that also corresponds with the 200 daily simple moving average. Guys, Bitcoin has not gotten back up above that moving average, so Bitcoin has not confirmed bullish strength. It has not confirmed bullish price action to me, so how can I be bullish on Bitcoin? There's an old saying in markets, and it's one that is very cliched, but it is also very true. The trend is your friend right up until it ends, guys. And right now, especially for the last 3 months or so, guys, the trend has been bearish. Especially in the last 2 weeks, the trend has been bearish. So it's very dangerous to start trying to be bullish when the trend is bearish, because what you're then doing is you're trying to call the bottom. And calling the bottom is almost always going to be a lot harder than you think it is. Because guys, right now the bulls and the bears are arguing about whether or not the bulls are right or the bears are right, whether or not Bitcoin's going to rally or Bitcoin's going to fall. But guys, there's something interesting that I found in the arguments of both of those camps in the last couple of days as I've been analyzing both the bulls and the bears arguments. You guys know I did a video on the worst case scenario, I did a video on the best case scenario, which was basically a video on the bearish scenario and the bullish scenario. And between both of those scenarios, I found something relatively interesting. I found that the bull scenario was reaching more. I found the bull scenario was trying to grasp at bullish ideas more. I found that the bulls did not simply have as much analysis, and they had to reach to get a bullish argument, where the bears, all they have to say is, okay, we're already bearish. There's not a whole lot of bullish price action. There's not a whole lot of bullish news going on. So why would I be bullish? Let's stay bearish because the trend is your friend until it ends. And guys, this is where the philosophy comes in for today's video. If you've ever heard of Occam's razor, then like I said, you probably already know where I'm going with this. Occam's razor is a pretty simple philosophical principle that states the simplest explanation is usually the correct one. So let's modify that a little bit and call that Occam's analysis and put that back on Bitcoin's chart. Guys, which of the two explanations that I've gone over in the last couple of days seems the simplest to you? The bearish explanation, which states we're already bearish, Bitcoin is not really making any higher highs, it's actually making lower highs, and a lot of the technical analysis is not looking great on just about any time frame you look at. There's not a whole lot of bullishness. We're below the 200 DSMA. We're below some important levels of resistance like $8,500 that we rejected off of a couple days ago. The bull's argument seems to rely mostly on a bullish MACD and maybe Bitcoin being oversold on the RSI. It doesn't have a whole lot behind it. So which of the two explanations is simpler? In my opinion, and you're free to disagree with me on this in the comment section down below, in my opinion, the bears argument is significantly stronger, partially because it's simpler and also because they don't have to reach as much. It seems to me that the bears are definitely the ones with the stronger argument. Now, with that said, I do have to add a caveat in here, and that is that the bears argument's always going to be strongest right up until the very bottom, and then the bulls change. That's why I said that if you're bullish right now, what you were probably trying to do is call the bottom, because we haven't had a confirmed reversal yet. Bitcoin has not gotten above the 200 DSMA, which is sitting right about here, and $8,500 around here. Bitcoin has not broken these. It has not confirmed bullish. So if you're bullish right now, then what you're doing is you're trying to call the bottom. You're trying to predict where Bitcoin is going to bounce because it objectively has not happened yet. And if you know anything about technical analysis, you know that trying to call the bottom, unless you're a very skilled analyst and trader, you're probably not going to be able to do it perfectly, so you want to be careful on it. I'm not saying don't try to do it for the sake of learning, but try to be careful with it for the sake of trading, because you can lose a lot of money if you do it wrong. Bitcoin is bearish right now, guys. I want Bitcoin to bounce here. I'd love to see Bitcoin not have to crash all the way down to price targets that we've talked about, like $4,500, $6,400, 77, again, even 7.2, whatever the price target is. I'd love to see Bitcoin not have to do that, but you also have to understand that sometimes the analysis is going to tell you something you don't want to see. So always be careful with trying to fit the analysis to what you want, rather fit what you want to the analysis. What I mean by that at is if you want Bitcoin to rally, be very careful about just looking at the bullish argument. That's why I present both of them, and you guys get mad at me about that sometime, but I'm not going to stop doing it because it's very important. If you want Bitcoin to go bullish, make sure you're looking at the bearish argument. If you want Bitcoin to go bearish, make sure you're looking at the bullish argument. You have to weigh both sides of the case and then look at it objectively. That's where the no emotion thing comes in. Figure out which one is true and prepare for that one and try to make your trade based on which way you think Bitcoin's going to go while also being prepared for the other scenario. So guys, all of that to say that I think the bears are right now. At least the bears have not been proven wrong yet. If the bulls are going to prove the bears wrong, here's what's going to happen. Guys, it's pretty simple. Whenever you see Bitcoin is in a downtrend, normally there's some way that it can get out of the downtrend. Normally there's some way that it can confirm that that trend is over. Here's how Bitcoin does it. It's very simple. If and when Bitcoin gets above this level right here, $8,505, and stays up there for over 48 hours, that is my confirmation that the bulls are back, at least for the short term, and that's when I might start looking to open a long position. Before then, guys, I sadly have to be in the camp of the bears because I'm being proven by the technical analysis and by the evidence on the table that the bears are the ones that are currently correct. Anyway, guys, I hope you did get some good value out of that. We're going to go ahead and move on to some news. This broke yesterday, but we're going to talk about it now. Coinbase Pro's fees surged 233% for low volume users, while whale fees drop. Interesting move on Coinbase's part, and I'm not really sure what their reasoning is here, so I'm not actually going to commentate on them too much on this and berate them for their decision because they may have a very good reason for doing this that I'm not aware of, but I am going to show you this. Their new tier list down here looks like such. You can go ahead and look at that while I'm reading this. Starting from October 7th, Coinbase Pro will adopt a new fee structure that will cause its maker trading fees for low tier, $10,000 and below, to surge as high as 233% according to the update posted on October 3rd. Following another surge in March 2019, Coinbase Pro currently charges all trading accounts under $100,000 with a 0.15 maker and 0.25 taker fee. After October 7th, trades of $10,000 and lower will see maker fees increase by 233% from 0.15 to 0.5 according to the announcement. Taker fees will additionally surge 100% from 0.25% to 0.5%. Well, guys, you can see down here on the tier list, if you're trading above $50 million, then there's no maker fee, so the solution is pretty simple. Just get $50 million in your Coinbase Pro account and you'll be fine. No, but seriously, guys, it's really funny that this tier list goes all the way up to $1 billion plus in trading. Who is trading $1 billion on Coinbase? I'd like to know this. This is not like your total trading history like Kraken does. This is $1 billion trade. Who's trading $1 billion worth of Bitcoin? I would be very interested to see who's doing that. Anyway, guys, this is making people not too happy, especially considering Coinbase used to not really have fees on its trading platform anyway. Tell me in the comment section down below what you think about this. Like I said, I'm not going to commentate too much on this. It's just some news because they may have a very good reason for this that I'm not familiar with, and I don't really want to judge someone when I don't know the whole story, so I'm going to leave this to you guys to start a flame war in the comment section down below. And one final piece of news, guys. PayPal officially drops out of Facebook's Libra project. Hallelujah. I use PayPal, and I love PayPal, and I'm kind of happy to see that they're not affiliated with Facebook's Libra project anymore. The global payments giant becomes the first founding member of Libra to officially depart the project. According to a statement sent to the block from a PayPal spokesperson, that the company said that it has made the decision to forego farther participation, which is legally speak for bye Felicia, adding that it will remain supportive of Libra's mission and will continue to explore how the two firms can work in the future. PayPal's statement read, "We'll remain supportive of Libra's aspiration and look forward to continued dialogue on ways to work together in the future. Facebook has been a long-standing and valued strategic partner to PayPal, and we will continue to partner with and support Facebook in various capacities." This is interesting also, guys. In addition to PayPal, other payments giants, Visa, MasterCard, and Stripe, are reportedly hesitating to officially sign on to the Libra project. Guys, I am not a fan of Libra. I think that's pretty obvious. I don't think a whole lot of us in the cryptocurrency space are. I don't want to speak for you. Tell me in the comment section your opinion on this. I'd love to hear it. But I really don't think there's very many people in the cryptocurrency space who are too excited for a gigantic, quite frankly, somewhat evil tech company like Facebook to be stepping into the cryptocurrency space with as much money as they have. I mean, Facebook has tens of billions of dollars in cash set aside for when they need money to do something. They could easily crash Bitcoin at the exact same time that some bullish developments on Libra are coming out and try to have Libra take over the cryptocurrency space. They're a big enough company that they are a threat to the Bitcoin ecosystem, and it's one that needs to be taken seriously. In my opinion, Libra's probably one of the biggest threats that Bitcoin actually faces, and I'm not saying that to fearmonger, but honestly, guys, governments are slow, and they don't care a whole lot about Bitcoin. Libra and Facebook, they do care about Bitcoin because it's a competitor. And guys, by the way, some people are going to say, okay, well, Libra's not actually controlled by Facebook. That's wrong. Facebook was the one that loaded the account, so Facebook was the one that started Libra. Facebook's the ones that's providing all of the funding for Libra. Even if they structured it democratically and they pretend like they don't have any control over it, they have all of the control over it. They're pulling the strings. They know what they're doing. I would like to see the other, 26, 27 members drop out of Libra, because quite frankly, I don't really think Libra's project is something that the world needs. I think Bitcoin being decentralized is exactly what we need on the other hand. Anyway, guys, we got through all of that analysis much faster than I thought we were actually going to. You know, I like the idea of Occam's analysis so much that I may go ahead and make a Cryptocurrency Technical Analysis Academy video out of it. Speaking of which, guys, there is a sale running with a $40 off coupon code down below. If you want to learn how to do technical analysis on these markets, learn how to trade these markets, whether Bitcoin's rallying or crashing, you need to know how to read the markets. It's very important that you understand technical analysis on a long-term and a short-term basis, both on a fundamental level and on a much more advanced level. That's what CT2A is designed to do. The first 7 videos in here, guys, in the introduction, this is stuff you probably already know. I will be quite honest with you. I put it there for the newer users. If you're new to cryptocurrency, use this section and you're going to get caught up to speed. If you're not new to the cryptocurrency space, you're probably still going to get some value out of technical indicators down here because you might not be using every single one of these, and it's good to review anyway. Even if you're an expert in cryptocurrency, I was just talking to someone in the Discord server who's been in the market for a little over 2 years now. They've been working in the banking system for 12 years, and they just joined CT2A because they thought they were going to get value out of the technical analysis portion of the course. I'm going to keep up to date with them and see what they think about that. These videos down here, while you might think that you know all of this stuff, I promise you that you're going to find some information here that you did not realize was important or you didn't even know existed. Gut feeling, guys, this is one of my favorite videos in the entire academy. No one talks about this. This is your instinct. This is your feeling that something's going to happen in the market. You can tell what's going to happen before it's ever happened. Let me ask you a question. Have you ever been driving down the highway and you just knew that there was a cop that was going to be up about a half a mile on the right with a radar gun? You knew he was going to be there. That's your gut feeling. That's your instinct. That's your intuition. That's a very important part of trading as well as a part of your life. And people don't talk about that, but it's extremely important that you're able to understand what's going to happen in the market before it happens. That's just one of the videos in here, guys. All of this stuff is very high quality content. It's going to help you understand these markets. It's going to help you profit in these markets, which honestly, if you're investing in these markets, you should invest in your education first so that the rest of your investments turn profitable. The link is in the description down below, guys. We have nearly 900 members in the academy. I'd love to see you join us. There is a 14-day money-back refund guarantee as well, so you can use that as a trial period if you are not convinced. And if you have any questions, as always, guys, feel free to shoot me an email at cryptojeb@gmail.com. You can message me on Discord if you're in the Discord server. The link to that is down below. And you can also leave a comment in the comment section down below, and I'll get back to you as quickly as I can. Anyway, guys, we're going to go ahead and wrap the video up. I'm going to go get my, 73rd cup of coffee, and then I'm gonna go have a good day. Hope you guys do as well. But like I said, guys, that is going to do it for today's video. I do want to thank each and every single last one of you for watching as always. And I will see you guys in the next video. Peace.